When markets drop, it triggers fear. And that is a very natural human reaction.
Volatility is a part of investing. Remember that, remind yourself, expect to see it.
We at Curo 100% do not believe that anyone can time the markets properly. And it's because you have to make 2 calls and it is impossible.
So pretty much every year, there is a reason to decide not to invest or to get out of the market. But yet the market ends in the positive 75% of the time. And stocks have historically been one of the best asset classes to grow wealth.
Hello, hello. Welcome back.
Hi, good to see you again.
Great to see you too. Welcome back, everybody, to Living Richly with Curo, episode number 44. My name is Ann McCabe. I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, by my awesome partner, Atricia.
Hello, I am Atricia Roberts, COO and partner here at Curo. Thanks for joining us again.
Yes, thank you. And Atricia cares so much about you all that, as you can tell, she is not in our office in Maryland. We'll have to find out momentarily where in the world Atricia is. But she cares so much about you all and doing this podcast that she is making it happen in a hotel room in an undisclosed location.
In an undisclosed location, reporting live. But it's important that we be consistent. So sometimes we have to adjust.
Yes.
But so it seems to be working okay so far.
Yeah, we appreciate it. So thank you for making it happen.
Of course.
So today's episode is going to be 5 things to do when markets are volatile. Our goal here at the podcast and at Curo in general is always to educate, inform, inspire. And 2025 has started with a bang of uncertainty and some market volatility kind of coming back into play. So we thought that this was not only timely, but the tips that we're going to give you today are really evergreen. Anytime in the future we hit bouts of volatility, which absolutely will happen, hopefully you can come back to this episode and be reminded of some practical strategies that you can implement to get you through. So before we go through our 5 strategies, let's do a quick A-team catch up. So are you going to tell the people where in the world you are?
Yeah, I won't give specific location, but don't want anybody hunting me down. No, I'm teasing.
By the time this airs,
oh yeah, I'll be gone.
Anyway,
so I am in Phoenix, Arizona. I actually just landed a few hours ago prior to our recording time here for an advisors conference with one of our investment partners, AssetMark. So if any of our clients are listening to this podcast and you may be familiar with the name AssetMark, it's an investment partner we've had for many years. So they also host an annual event. Unfortunately, this year it's in the same month as Kestra Ascend. So I have been on a lot of flights in February, but this is always a really, really good event. AssetMark does a great job of bringing wonderful speakers, really good content. So I hate when I can't come. So even though I'm sick of the airport, I really wanted to be here this year. So I'm excited. It gets started this evening and then through the end of the week. And then I'm hoping I come back with some really good ideas to just kind of throw at you when I see you on Monday, Ann.
Bring it. Bring it. Our team always gets terrified when one of the two of us is at a conference or where they're like, oh God, brace yourself. It's always like the calm before the storm. Because when we're gone, I feel like it's a little bit more calm. And then we come back and we're like, all right, guys, let's get to work. So can't wait to hear.
Yeah, but the weather is beautiful here. Actually, I think the weather is pretty good back home too today.
It is.
Considering.
It's beautiful.
But yeah, the weather's gorgeous here. I mean, I'll spend most of the time in air-conditioned conference rooms, but if I get a moment to grab some sun, I'm looking forward to it. So it should be a good time.
Absolutely.
All right, so what's new with you?
Oh my gosh. Well, aside from basically dying from a cold.
Right. Literally fighting for your life.
Fighting for my life. Y'all are so lucky that we did not record this like 2 days ago because it would have been a miserable thing to listen to because I was straining to say anything. So I made the mistake. I was getting over a cold last week and I made the mistake of linking up with one of my best friends, literally from 8th grade. And every chance I get to hang out with her, I do. It was her husband's birthday, so we went out actually to a really cool spot called O Mateo, which is a like Tex-Mex, high-end Tex-Mex restaurant in Tyson's Corner around like the Capital One hall that they've built over there by where like Capital One headquarters is in Tyson's. So it was a really fun spot, but we ended up sitting in the lounge area and we were talking and I was having to like strain to, just talk just over the loud noise. And I woke up on Sunday morning with literally no voice. And then, of course, I took my little guy to the Caps game on Sunday, which was super fun, so much fun. Ovi actually got a hat trick, which was amazing. So Ovi is like 12 goals away from the all-time record that was by Wayne Gretzky. So everybody in the DC area, even if you're not a hockey fan, is like just waiting for this to happen. So we were there when he became 3 goals closer to the record, which was just so exciting. And hat trick, like all the hats, all the baseball caps were thrown out onto the ice, and so it was just super fun and great for my little guy who's 7 to be there and experience that.
Yeah. But of course, that left no time for vocal rest.
Yep. Yeah, exactly. And then we came back home to my older son's playoff game. So I tried really hard not to scream or make any noise, which was very challenging for me during their games. But alas, I got my voice back and we're all good.
Yeah, just in the nick of time. Well, it was worth it, at least, right? You lost
Oh,
your
yeah.
voice, but sounds like a wonderful weekend.
Yeah, such a great weekend. So, just good seeing, what it's like when you see an old friend who's like
Yeah.
basically a sister.
Oh,
Just
yeah.
amazing.
Oh, I
So
love
good
those
times.
friendships when they know you, know you. There's no pretense, no. Oh, I love those relationships. Good for you.
Yeah, and it's also nice those relationships where you may not talk or even text for a couple of months, even
Hmm.
though we live in the same area, but both of our lives are so busy, and yet you just pick back up right where
Yeah.
you left it. There's no like awkwardness or like, why haven't you called me or why haven't you texted me? It's just great. So
Yeah.
good times
Good.
with girlfriends. Yeah,
Nice.
it was great. All right. Well, let's talk about our topic of the day, how to deal with this market volatility. And the day that we're recording, we really haven't seen the S&P 500 sell off all that much. I mean, last week we hit an all-time high, but we're bracing ourselves, in our firm as an investment committee and where we're talking with clients right now, we are saying that we are expecting for volatility to pick back up this year. There's so much uncertainty, so much to be determined. And so we really want to arm not only our clients, but our listeners who may not be clients with just great strategies and information on how to get through it. Part of investing in the markets is volatility and is uncertainty. We can't like get away from it, right? So it's not about running away from the volatility, it is about managing it and again, having strategies to get you through, help you stay on track. Yeah. All right, Atricia. So, why don't you kick us off with number one of
Okay.
our 5 things to do when markets are going crazy?
So, as Anne just mentioned, the first strategy you want to remember is that volatility is normal and it's healthy. So, whether we're in economic downturn, there's a geopolitical event, or just the market's natural ebb and flow, volatility is a part of investing. Remember that, remind yourself, expect to see it. Now, as of the recording today, we have gone over 600 trading days without a 10% stock market correction. Yet, since 1980, the average intra-year decline, or any point throughout the calendar year, the S&P has been down about 14%. So pretty much every year, there is a reason to decide not to invest, or like we have with lots of clients, to get out of the market, to divest. But yet the market ends in the positive 75% of the time. And stocks have historically been one of the best asset classes to grow wealth. So we would not get the superior returns if the market just went up and to the right. And I don't know if this is mirrored, but up and to the right all the time. And we've talked about it on this podcast before. When we get downturns in the market, just try to think of yourself as stocks going on sale. Stocks are going on sale. If you remember those things, then it'll help you weather when volatility or the markets get really choppy.
Yeah, and who doesn't love a good sale?
Yeah, I love a sale.
We love sales. All right, number 2, our second strategy is make sure you have enough cash on hand. So, having liquidity is key to weathering a downturn so that you don't have to sell an investment at an inopportune time. If you think about a year like 2022, which was not that long ago, pretty much every asset class across the board in 2022 declined. So, you wouldn't have wanted to be in a position in 2022 to have to sell into a down market. We never want to sell when things are going down. We want to sell when things are going up. So go back to episode number 4 for some specific strategies that we share around how much cash is appropriate. But generally, depending upon your life situation, we are going to recommend somewhere between 6 months of your expenses up to a year if you're still working. And for our retired clients, sometimes we'll actually push that up to 2 years, 18 months to 2 years of what your portfolio income needs to be. Now, the way that you figure out that number is you take your overall expenses, you back out any sort of fixed income that you have coming in. So think pensions, social security, maybe an annuity payment. That gives you the gap that your portfolio needs to generate. Take that number and multiply it by 2, and that will give you the 2 years worth of portfolio income that you need. And that can stay in something like a money market, high yield savings, even potentially short term bonds, depending upon the situation, so that it is nice and safe for you when you need to take that income.
Yeah. And we here at Curo have been having a lot of those conversations with clients recently about sufficient cash reserves. Because again, if we're anticipating volatility, we have clients who are in the distribution phase of their lives. We tend to be proactive cash managers here. So it's a really good tip. Okay, so a third tip, and this is, I think, important in every aspect of your financial life, is to revisit your long term plan. So, volatility can seem very overwhelming if you're just focused in the short term. But when you zoom out and you think about the long term picture and you remind yourself why you're investing and the time horizon for your goals, a year or two is a blip on the radar in context to an entire lifespan. So you want to go back to your financial plan and goals and reconnect to your why. Why am I doing this? Why am I investing? What is it that I'm trying to achieve? Make sure that you are making decisions that align to the time horizon for those goals, for your why goals, and not just focus in on the short term ups and downs.
Yeah, we always say it doesn't make sense to make decisions in the short term, like what's going on right now in the markets for goals that many of us are working towards that are literally decades in the future, right? So that's what we're talking about with like the misalignment of the time horizon and making decisions. If you are talking about goals or cash that you need in the next couple of months, then go back to the point we just made about having enough cash. But if we're talking about longer term, like retirement or college planning for your kids or buying a house in 10 years, then just make sure that you're making those decisions in line with that time horizon.
Yep, absolutely. Now, the next one is a toughie.
I know. I know. Gosh, how often do we talk about this though? So we're calling number 4 avoid emotional decisions. Another way we talk about this with clients is maintaining our emotional centeredness when things are going crazy around us. Now, we very much appreciate that this is easier said than done sometimes. When markets drop, it triggers fear. And that is a very natural human reaction, right? So when we see red on the screens or we open up our portfolio statement or we log on and we see the red numbers, we see that we're losing money, our instincts tell us to react because our instincts tell us to protect ourselves to make that bleeding stop, right? So it's really important when we are talking about investing to not react, but to plan. And we like to talk about the reason of why we have this reaction as human beings. And it goes back to the reptilian part of our brain, which is the oldest part of our brain. And this is the part of our brain that is responsible for keeping us alive. It is the survival mechanism. Okay. So when we see losses, our brain perceives that as a threat. Now, if you're thinking about our ancestors, the similar sort of analogy would be when our ancestors were being chased by wild animals and about to get eaten alive. The reptilian part of the brain was like, oh, you need to either fight or flight, right? It is that same trigger that goes off when we are losing money on paper. But as we know, in modern times, thankfully, most of us are not being chased by wild animals. At least I hope we're not. And so, what we have to do is take a moment, take a pause, and make sure that we are making rational decisions because oftentimes that reptilian part of our brain can lead us to making irrational and kind of panic selling decisions. So, the key here is awareness to even like name it. Like, okay, this is the reptilian part of my brain that is reacting right now. I am safe. I am not being chased by a wild animal. And I am working on goals that are many, many years, if not decades in the future. So just that naming and that awareness, I think, will help you not react when that part of your brain is telling you to do something.
Yeah, the tough part too is that unfortunately, in those instances, especially when we have really big corrections, right? Really deep corrections, they're also tied to something else that's happening in the world that already has people panicked and stressed and worried. I think back to
Yeah.
2020, right? During the initial COVID pandemic lockdown, and people were already on edge, and then the S&P falls off, what, 34% in a matter of a few weeks. And so a lot of times those really big downturns align with other sort of environmental factors, but again, maintaining emotional centeredness. Think that, this is a short-term thing. I remember when we locked down for COVID, in my mind I was like, "Oh, we'll be down for 2 weeks and then we'll go back to life as normal."
Yeah. Haha. LOL.
LOL, funny. But again, if you try to remind yourself of those kind of things, right? So this is a temporary stop. Now, what I thought was 2 weeks turned into close to 2 years, but eventually we got back, right? And that's what's
Yep.
important. That's what's absolutely important.
Yeah, exactly. No, you're so right. And how many times have we said to clients that, this too shall pass and history doesn't repeat itself, but it rhymes. And so every so often we have a big trigger in the market that causes a panic. So it was COVID in 2020, it was the great financial crisis from 2007 to 2009. It was the tech bubble bursting, it's the real estate market bursting. So fill in the blank for the different scenarios that are going on. But the constant is, to your point, fear and uncertainty, and that it inevitably passes. It always does. Every single market correction, sell off that we have ever been through has always come back. It's just a matter of how long it takes, which is why the cash position point is so important.
And to that point, our last tip or strategy for weathering volatility is to work with a trusted advisor. And I know you guys hear us say that a lot on this podcast, but we are financial professionals and we believe that it is extremely beneficial to have a professional in your life to help guide you along that path. So having someone who you trust, who you feel safe talking to, will help you feel less nervous and more confident in the plan. And this can be one of the most important investments you make in who is your trusted advisor. One of the things that we can do as advisors is provide an objective perspective and historical data, like Ann and I just shared. Not that history will repeat itself, but it can be helpful information to have to make educated decisions. Good advisors, and I will say good advisors, we're not all great, have disciplined process to take advantage of market volatility with strategies like tax loss harvesting, which can optimize your results. So we often try to find the silver lining in the bad times. So again, a lot of the work that we do, and we laugh about it sometimes, feels like behavioral therapy. It's not so much how well we're investing money that we're doing it so great. It's can we connect with our clients? Can we develop trust so that when they start to panic, they will listen to us so that we can
Yeah.
help them avoid making bad emotional decisions.
Yeah, exactly. Yeah, I mean, and how much of that are we doing right now, right? We've
Right.
got obviously we're in the DC metro area, so we have a lot of clients who are either directly impacted by Doge and what's going on with the government or indirectly impacted. And so we're having lots of conversations. And then on top of it, just lots of fear and uncertainty with what's going on in the markets. And so oftentimes just even having that conversation, it is like a good therapist, right? Like a good therapist doesn't tell you exactly what to do, but they ask you the questions so that you come to the conclusion and the decision that is in your best interest. And that's our job too, is to kind of help ask the questions, to walk clients through, okay, if you feel like you want to sell and go to cash, which is, I'm just going to tell you right now, the worst thing you can possibly do as a long-term investor. That's the takeaway there. But if you were to sell and go to cash, like walk me through the next step. So what does the next step look like? When are you going to get back in? And oftentimes they'll say, oh, well, we'll get back in when things have cleared and it feels better. But here's what's going to happen. I'm going to tell you right now, and Atricia and I have had many, many, unfortunately, situations over the course of our career where we've had to have these tough conversations. What'll happen is the market will go back up. And then you know what you're going to say? I'm not going to get in now. The market went back up. I'm going to wait until it goes on sale again. And it is like this vicious cycle. And so many people, we'll meet with prospective clients and they'll share stories with us like, yeah, I got out and I went to cash during the financial crisis and I could just never get back in because it was never the right time. So we at Curo 100% do not believe that anyone can time the markets properly. And it's because you have to make two calls. You have to make the call of when you're going to get out and you have to make the call of when you're going to get back in. And it is impossible to do.
Yes. And most people are wrong in both calls.
Yeah. Yeah, absolutely.
Yeah.
It's just, it's not, it's not something. And I always joke with clients and I'm like, if you can time the market, both when to get in and when to get out, let's go into business together
Yeah.
and create a hedge fund and like go live on a private island because like, if anybody could do that, then they would be
Right.
doing that. It's just not
Yeah.
possible.
It's not. So you have to try to stay sane in the midst of it all, and working with somebody can really help with that. When you have someone you can pick up the phone and call. I actually had a client ask me a couple weeks ago, "Should I be panicking?" And I said, "Nope, you should absolutely not be panicking." "Okay, great. I'll see you in in a few months."
Like easy peasy. If it
Right.
were
If they were
only that
only all
easy.
that easy. Right.
Yeah,
Right.
exactly. Exactly. All right, y'all. Well, hopefully this is helpful. Kind of our bottom line here is volatility is not something that you should fear. To Atrice's point earlier, when the market is on sale, it's on sale. And so certainly if you are an accumulator, this is not for our clients in distribution phase already in retirement, but if you are an accumulator, we would encourage you to embrace volatility because that means that great stocks and great companies are going on sale, but it does require some thoughtful planning and almost like pre-planning. How am I going to react and what am I going to do when the market goes down? Because we promise you it will inevitably. It's just a matter of time. All right. Well, before we go into the closing thought, I'm just going to do a quick housekeeping reminder that we would love your questions. So send those in to podcast@curoprivatewealth.com. If we answer your question on the podcast, we will send you an Amazon gift card. So make sure to send those questions in. And then also, please share this episode with a friend who may need a little bit of encouragement and possibly some calming down with some of the crazy that we have been dealing with so far in 2025. Give us the 5 stars, the likes, subscribe so you know when we drop our episodes, all those good vibes.
Yeah.
Please.
We want to hear from you. We want the reviews. We want the stars.
We do. Yeah. Let us know how we're doing. Give us some feedback on how it's going. All right. So, closing thoughts. What do you have for us today for a closing thought, Atricia?
Yeah. So, thinking about trusted advisors, I had a meeting with a licensed trusted advisor in my life. And I was and I was in this venting session of how tired I am and how I should be doing better at this and better at that, and how my refrigerator has no food in it because I'm never home, and I felt like I was failing, or I am failing as an adult. Like sometimes I feel like professionally I'm doing okay, and then my personal life falls to bits. Other times I feel like personally I'm okay, and my professional life is falling to bits. So one of the things that she asked me was, "What rubric are you grading yourself by? Who set the standard for how you feel you should be doing or what you should be doing?" And it really made me evaluate that sometimes I set a standard for myself that is often based around perfectionism. I think it's the star student syndrome I suffer from. And
I was gonna
then
say, does she know that you're a star student?
but then to that point, when I don't live up to it, I beat myself up about it. So one of the things that she advised is to always ask myself that when I get in that moment where I'm like, oh, I'm not doing what I should or as good as I should be doing, is to ask myself, what is the grading scale here? What am I grading myself against? And help reset that expectation for what I should be doing. And that sometimes you're doing much better. I'm doing much better than I realized. So I thought that was a good, it was an eye-opening moment for me in that meeting. So I figured I would share it as my closing thought. Just ask yourself when you're beating yourself up, what is my grading scale here? Who am I judging myself against? And then reset the expectations for what success looks like.
Yeah, I love that so much. It reminds me of one of the things that I don't believe in is like the idea of work-life balance because I think it sets us up for failure because sometimes, like you said, like your professional life right now is crazy. You're traveling a bunch, we're crazy with meetings, it's tax season, so things get very busy. And so your life and our lives don't feel very balanced right now. But I always try to think of our lives as like harmony, like being harmonious versus necessarily balanced because sometimes, we will take the personal trips and we'll go away for, maybe a week or two on a great vacation and obviously our life is not balanced in that moment either, right? We're taking a vacation, so we're not working. So I think if we can approach it from a goal perspective that sets us up for more success and just not so much like self criticism.
Yeah. Yeah, it's tough. And again, to your point, I love that work and life is never going to be in balance, but it's about the harmony. I'll give you a quick harmony example or what triggered when you said harmony. So I went on a trip to Paris. Our listeners may remember last month. But while I was there was a day when I just had to get some work done. So what I did is I took my laptop, I found this beautiful historic library in Paris. I took a taxi over to this gorgeous library and I sat there and I worked. That to me was
Mm.
the harmonious part of it. Like, yes, I'm supposed to be on vacation and I do have to do this work, but how can I blend the two together and still enjoy something that's a really nice experience while I'm also having to do this work?
Wow, I love that. That
Yeah,
is
you
amazing.
said it, and that triggered for me, and I was like, "Oh, yeah, I guess that would be, like, one of those harmonious moments where it's not really
Yeah,
balanced, but if you can make the 2 blend sometimes better, then I think you're doing
yep,
alright."
yep, exactly. Love that. Thank you for
Alright.
sharing. Yeah,
Of
and just
course.
remember, like, when you're saying, like, "I'm not doing well," or this and that, like, says who?
Right.
Just call me next time. Call me next time your inner critic says that, I'll be like, "Yeah, okay, let me tell you the truth."
Yeah. I
As an
appreciate it.
objective,
Yeah,
yeah,
as one of my trusted advisors.
yes, as an objective outsider, I'm happy to share my thoughts on how you're doing.
I appreciate that.
Yeah.
Okay, what are your thoughts for us this week?
Okay, so my closing thought, I had a little bit of an epiphany. On my almost teenager's phone, I have screen time limitations. And I had an epiphany a couple weeks ago that I didn't really know how much time I spent on social media on any given day. My things are Facebook and Instagram. I don't do TikTok, and LinkedIn is professional networking, so I don't consider that really social media either. But I wasn't really aware of how much time I was spending on a daily basis on these social media platforms. So I actually set a limit on my phone for Facebook and Instagram of 15 minutes. And I was like, that is reason. Like, I don't need to be on social media for more than 15 minutes a day. I could be doing other things with my time. Because usually, like, when I'm putting my 7-year-old down for bed and I'm just waiting for him to fall asleep, but I'm still in his room, I'll, scroll through and see what's going on. But I'm here to tell you that I was spending more than 15 minutes a day on social media because, like, the 5-minute warning comes up and I'm like, oh man, that felt like,
I just got started.
yeah, I was like, "Oh, man, that felt like nothing." And I was in the middle of, like, sending a DM to one of my friends, and it just shut me down, and I couldn't get back on till the next day, and I was like, "Alright, I mean, I asked for this."
Yeah.
So, but truly, I feel like it's helped me just be more aware of, how much social media can be a little bit of a time suck. I also think that even if your thing is not social media, but let's say your thing is reading the news, like, just doom reading the news, and you feel like it's negatively impacting your mental health or it's pushing you to make crazy decisions, like to sell out of your investments and go to cash, for example. Like this may be something you want to also kind of put some guardrails for yourself on. So I thought I would share it because it's been enlightening and also just helpful. And I feel like I'm, spending time like reading other things versus scrolling endlessly on social media.
Yeah, well, good for you. But yeah, when you said 15 minutes, I was like, that doesn't seem like a ton of time. 15 minutes goes by so
So
quickly.
fast. I know.
Yeah.
I know. But I just don't like, I personally don't need to spend more than 15 minutes a day.
Yeah. I mean, there's really not much there. I mean, I
No.
deleted TikTok and Twitter. Well, X is what it was called.
X.
I do
Yeah.
have Blue Sky on my phone, but it's a newer platform. So there's not even a whole lot of engagement I found myself in just yet.
I don't even know what that is.
So Blue Sky is basically Twitter reimagined. So if you remember what Twitter was 10 years ago, then that's what
Yeah.
Blue Sky is. I don't want to I might be
Ah,
wrong, but I think it's some of the original Twitter developers who started Blue Sky a few years ago, but the platform, it feels just like the old Twitter. It feels exactly like
okay.
that. Because Twitter was always my preferred platform before it just
Yeah.
got full of ads and bots and spam, and it just wasn't fun anymore. I
Yeah, my feed
realized,
is just all Elon Musk.
yeah.
Like, I'm like, "Wait a minute." I think that's everybody. I go to my feed and it's like,
Yeah.
tweet or X upon X from Elon Musk, and I'm like,
Yeah.
"Cool. All right,
Yeah.
awesome. What
Not
is
fun
anybody else
anymore.
saying?"
So I got rid of X, but even with not having TikTok anymore, which I used to doom scroll on for a long time, I realized I don't really miss it as much. And then when I do have idle time, because there's like nothing else to scroll, then it's like, okay, well, let's find something else to do. Maybe I'll, read a book, turn the pages of a magazine. When's the last time you physically held a magazine and just flipped, through the pages? So
Yeah.
good for you. So
So
now
many
is
other
this
things we could be
an
doing.
ongoing thing for you, or is there a time
Mhm.
period?
No,
Okay.
I mean, it's working, so,
Okay.
yeah. I'm gonna keep it for now.
Yeah, I like it.
All right, y'all. Well, that wraps us for the week. Thank you so much for joining us. We'll see you back here next week for another episode. And until then,
Live richly.